Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May 24th, Wednesday. Speaker McCarthy just finished doing a small press conference before going into the negotiations. But first, I'm going to provide you some statements and some moves of the market because, yes, McCarthy is moving the market. There's a lot of pressure in both sides in the markets, but we are going to analyze that. But first, let me just quickly review NBA 30-year mortgage rate 6.70. That is ultra high. We are at levels of March and going higher and higher and higher. Let me tell you, this is why mortgage applications went down again, minus 4.6% in the red 2 months in a row. People are not willing to take any mortgages at these levels. I completely understand that. Refinance 443 going lower, and overall the index is going lower and lower. Purchase index is going lower. Well, it is what it is. With these high interest rates, this is the consequence of the Fed raising interest rates, right? So this is comprehensive. I understand that, but it is really destroying the demand in the home sector, in the consumer spending. Let's see the labor market in the upcoming days, because that is key to really both completely convince the Fed that economy is slowing down, and at the same time convince the market that the economy is not going to go in a recession. Apart from that, right now we are entering noon, but we have still to see the FOMC minutes. But I wanted to provide you with a quick update on the McCarthy comments. First, it was a very volatile little press conference. This is the Nasdaq 1 minute charts. As you can see, very clear downward pattern, lower lows, lower highs. Look at this. I took this long because I saw 200 contracts at 13,580. I saw 200 Nasdaq E-mini contracts here, and that's why I took only one contract with stop couple of points, actually 10 points below, so risking 200. 10 points is 200. And I was just targeting this structure here, not completely. I mean, I have a rule that if I am 10% or less at the target, I can just manually take it. I actually hit the target, and look at this top in tail. That was a 5.20 risk versus reward trade. That was really, really beautiful. And that's the only thing that I wanted. I just wanted 50. It was actually 50 points, $2,000, risking 200. That's the power of technical analysis, the power of reading time and sales, and the power of experience. I wanted to share with you every day just a couple of trades just to give you ideas. And I'm not only having winners, sometimes I take bad trades as always, but managing risk is first. I manage my risk, I have a nice position, and I just took profits before that little press conference. So let's analyze what it was said. So let me just say the press conference started at 11:42, and right off the bat he said, we are still far apart on a number of things. Well, look at this candle. This candle was a killer, but then people started buying the dip. I think it was a lot of pressure around 13,590 or around that. And I completely understand people just panicking. There's a lot of volatility around this debt limit deal. And then he said, we can get to yes on the debt deal. And he added, today. Oh boy, we just rushed higher. We recovered this pivot and we started just waiting there with the point of control around 600, actually is at 601. And I'm still convinced that markets today, after this break on the technical side, given this accumulation of the lows, given that we have a lot of downside already today and also yesterday, I think markets today are positive on a deal. And after McCarthy statements, I really think we can maybe finish in the red right now. Sorry, finish in the green or barely in the red, 25%, 0.25%, something like that. I can see markets breaking this to the upside, also trying to reach VWAP or at least some key level of equilibrium. We are holding right now in a wedge, so let's see what happens later. But again, I think markets today are quite positive on a deal or at least on progress. And if we get progress, if we get some news later on that negotiations are progressing, I think markets will go a little bit up and we can see into the power hour some nice momentum to the upside. Apart from that, I just wanted to highlight several things regarding risk. Small caps are getting crashed not only today, also yesterday. And if we check the daily, we can clearly see that this breakout, that the order indices, the Nasdaq and the S&Ps already got, it was denied on the small caps. Trust me, Russell 2000 is key to really understand if markets are ready to risk on and to go on the flow into the power to the upside in the economy in the midterm or not. And looks like we tried. We broke in here with a choppy consolidation and then we got rejected. Today we are seeing continuation. And honestly, I don't know how we will end up today on the Russell, but Bitcoin is 3.41%. And the daily is just, I put a box on this consolidation between this high, pivot high, swing high, and this swing low. I think this was just panic. And I think this accumulation is key to really understand if we are going lower or higher. There might be another fake out to this support, previous resistance that got broken out and having some kind of support around 25,000. But if we see big volume on the breakdown and the Russell is not following, is following downward, Bitcoin and Russell can already show that risk is really off and the risk appetite is not going higher. And I would be a lot more cautious on the Nasdaq and the S&Ps being bullish because both are in the red, but risk on along with gold being in the red, all metals. Look at copper. Copper already reached our target. We were targeting this 3.5. It got there. This is major support from November last year. So I expect some buyers to commit. As I always say, anything can happen. We might see a lot more of push to the downside to reach this consolidation down here around 3.4. But for now, metals, not only copper, also silver, 1.50. Looks like we are not retracing to the 61.8 on the fifth retracement. We are just melting on the silver and also on copper. So that, along the fact that risk is really, really off and rejecting higher pricing, and dollar is really pushing, let me tell you, we are just nailing this change in inflows in other markets. We can really see that dollar is really strong. I can see dollar just pushing higher and higher until 105. As I always say, yields are also higher. And let me tell you again and again, as always, I always mention this, interest rates futures for December this year are keep going higher. Bonds market are no longer pricing in any interest cut this year. And that is key to really understand the position of the Fed. If we trust the Fed, bonds market are already realizing that, and maybe we have to change our approach on the markets and really see or let these markets to just rest a little bit, pull back a little bit more, and to manage better positions. Look at these banks. Look at all the banking sector. KRE is almost 2% in the red after this big squeeze with PacWest, but everything is in the red. JP Morgan, Wells Fargo, Charles Schwab, MTB, Bank of America, Goldman Sachs, Morgan Stanley, Credit Suisse, every single one of them is in the red. Actually, the only single sector that is in the green today is energy. Energy is 1%, the sector, because crude oil is just breaking out. You remember when I was telling you this ascending triangle into this previous resistance at 74? I still think that fib retracement 618 might be a good spot for sellers to recommit, because I don't think with this demand destruction in the economy, crude oil is able to go higher. We are seeing some accumulation due to also 70s being the level in which US Strategic Petroleum Reserve is going to buy a lot, 3 million barrels, I think. So I think we are not just going to just skyrocket higher. We are just waiting for short to recommit and maybe have a nice move lower, breaking this monstrous bear flag. I would think that this into the fib retracement would end up being a nice bear flag like this one. Show you, it would be a little bit higher. That would be insane. If we just go this into the fib retracement and then resolve the big bear flag to the downside on the daily, I mean, that would be a really nice trade short on crude oil. That's my idea. So that's my understanding of these markets. Let me just take a quick look. Yeah, I think I talked about everything. So the daily context on the Nasdaq and the S&Ps are just pulling back. Remember that the Nasdaq is a little bit higher. The squeeze was higher due to Nvidia and Google just going parabolic. So we can afford to go a little bit lower on the pullback. It is key for me to really hold 13,500. Let's change to the 30-minute chart and see the kind of levels. 13,500, this zone around here for me is key. This level is actually quite important because it was the first time we held and we broke again into a squeeze. So I think there's a lot of people that went long and accumulated big positions into this breakout. And I think they will be defending these positions. So I'm super interested on seeing the Nasdaq, how it reacts to this 3,500. Actually, we are holding that. And the S&Ps, though, is just going into this range again. Going into this range, and going into this range is actually really bad. Let me put a nice rectangle. So this was the range which we just broke out, and we are just rejecting. So my idea on the S&Ps is not as strong as on the Nasdaq, but as you can see, we have this big downside move and then into the range. Let me extend it for you. So this is actually a bear trap into the range and then into the breakout. So we really need to hold this level. We are right there. So in both markets, Nasdaq and the S&Ps, even though they are different in range and in price, we are at critical spots. S&Ps are defending the bottom on the previous range, and Nasdaq is just pulling back, trying to find a higher low on the daily. Finding this higher low around here could be really bullish for me into another move to the upside. If we have a depth limit deal, and also if we have good Feds and economic data. Let's see what happens, but we just have to be really patient. Patience is everything, as I always say. So looks like we are still consolidating, trying to, at least I think, maybe accumulate for a higher, or just rest a little bit. I don't think there's possibility unless there's news. I don't think markets are pricing in something bad today. I think they are optimistic, so I would be waiting for opportunities long for at least to reach this big WAP at 13,642 or something like that. I think this choppy price action is due to the volatility on the messages that are leaked or out of the negotiations. So just manage your risk. Manage your risk. This is being held. Be really careful because anything can happen. As always, I already covered a lot of markets that are seeing weakness. We are not seeing any sectors in the green, only energy, and that's due to crude oil having a monstrous push up. And apart from that, risk is off, dollar is strong, yields are pushing, bonds market are not pricing in any interest rate cuts. So you have reasons to really be bearish, but you have to react. And react, just wait for the news, be optimistic of a deal, and we can just move on of these negotiations and just continue talking about the economy and the fundamentals and their fundamentals below that, the underlying fundamentals. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates like this one, super important, midday at noon, and market recaps when we have big, huge news. Thank you for your time. As always, remember patience, react to those opportunities, react to your levels, and react to the economic data, and be disciplined with your losses, be disciplined with your routine, daily routine, and manage your risk always. Small losers are good for the long term of a day trader. Trust me, I already went through that. I learned that lesson. Let me recommend you risk management first. Right now, markets are super volatile. There's still plenty of opportunities if you want to continue looking the markets, watching the markets. We might have a deal, we might have a move or not, because yesterday we just were waiting and waiting and waiting, and we just sold off. So anything can happen in these markets. Be really careful because this week is really, really important for the market, and there's a lot of volatility and manipulation. So be disciplined. Stay safe, everyone, and see you tomorrow.